What do you have for us today, my friend?
Yeah, should be an exciting day. Midweek, we're getting some movement in this dollar if we pull up the platform. And we've got a very hyped up CPI inflation report coming up today, which I know you're excited about. You've been telling us your guesses all week long, your own model forecasts.
Oh my God!
What do you got?
Care less. Just let it be different than what they're looking for. What are they looking for?
Yep.
0.2, 0.3, or
well,
more?
I think this is why we're getting a little excited about it. Is we're expecting year over year an uptick in inflation, coinciding with
the PPI.
The PPI is softer, and we're with the less than expected rate cuts.
So what's the month over month?
Month over month, we're looking at
0.3.
0.3. Yep.
Okay.
So we'll see, but I think this is getting the year over year is getting a lot of attention just from retail, just because, you know, is the Fed going to cut? No. Inflation's ticking up. We're all doomed.
Okay, it's 1 month backward-looking number of a basket of goods that if everybody had, they couldn't survive with. So, again, don't get caught up in the context. Again, inflation is important. If inflation is systemically via CPI, PPI, ECI, or whatever you want to look at, there's 20 different metrics. The Fed has the favored one. Is it the ECI? I think no, it's not, because that's employment cost. PCE, yeah. Right. For us as traders, if you're a macro trader and you part of it is you want to try to chart economic activity, that's great. Any one data out of a data set has only so much value to it. For me as a trader, I'm less inclined to get wrapped up in the macro story. Yeah, inflation's not at 2%. The Fed wants it there. I'm more inclined to, if the number prints, again, let's talk about yearly. If it prints, 3%, what are we going to see happen? When I say see, and this is the trader. See happens is the algo-driven initial reaction to the number. So a high print there, what transpires?
In forex markets, we should see dollar strength.
Agreed, because we'll see the bonds get kneecapped.
Yep.
And now the bonds are actually a little bit higher today. We're a half a tick higher on the long end. We'll go right back to those lows of 111, probably test that 110.25 low from yesterday, which was kind of a cycle low. We'll probably go right there. But remember, bonds will rally, the dollar will rally, but where are we doing that from? Dramatically, dollar highs and bond lows. So what is more interesting to me, does it stay there? Or do we test those lows and do we come off? So if we get a print of 2.7 or 2.6, what happens?
Anybody's guess. I mean, we see it come down, dollar come down. But
initial reaction is they'll sell dollars.
But yeah,
absolutely.
The momentum.
We'll see Aussie rally. We'll see Euro rally. We'll see pound rally. Dollar yen will come off. It was interesting because everything reacted to PPI yesterday except the yen. It just sat there. Now the yen weakened later in the day, but completely unrelated to PPI. So we'll get this algo-driven reaction to the number. Whether or not it sticks will be the interesting part. As traders, that's what we want to see. They challenge the lows in these currencies or the highs in the dollar. Is it met with people taking profits and looking at that extreme, or are they going to challenge anybody who's short dollars right here and trade through those and continue to go? That we'll get an answer to probably by 8 o'clock in the morning, and that'll be interesting. So it's really, again, the number itself carries a certain amount of context for the macroeconomist or those thinking about the economy. For traders, it's whatever this estimate is and the actual. Right. That's what we're looking for. So set your game plan accordingly. What do you want to do? Are you looking for a dollar rally to sell? Well, this may give it to you. It may not. If you have a position on, you think about sizing and management, both taking some profits or where am I going to determine I'm wrong? So it becomes, you want to make all these decisions before 7:30. So you have 46 minutes to do that and think about what you want to do. Is the dollar high? Are these currencies on sale? Absolutely. Let's take a look at Kiwi. Did we bounce a little bit yesterday? Yeah, but
nothing really sticking behind.
That's not a particular. Yeah. Right. That's not a particularly healthy bounce. The only thing I can say is we're off multi-cycle lows. Right. Sub 56 cents or sub 55.5 cents. Euro looking at actually having a little bit better tape action to it. And let's go back down. Let's break that down to a more intraday chart.
Take it down to the 15 minute.
Sure.
Yep.
So we've actually seen the market do something we haven't had. 3 days of up moves. And while we've seen pullbacks, we saw a little bit pullback later on in the day yesterday where the euro traded off its highs a little bit. Never going back to that previous, we see this stair step up here, right. The second step. So tape action-wise, this has been much more constructive. So,
some of those risk-on currencies where you are at those lows, good news, you are getting a little bounce back, but hard to sustain right now.
Right. So this is, in terms of, are we bottoming? Was 102 the cycle low? I don't know. But tape action-wise, this is performing a little bit better, which makes me think that if you do get a hot print and we quickly go down to 102.5, that may be, again, 102.5 happens to be the first step. If you're looking at it, that also happens to be a little bit over one standard deviation daily range, which I think is 42 pips. If it breaks 50, 55 pips, and you want to be the contrarian of, I think this currency is cheap, that's an interesting entry level. And then you think about, where do I manage it if the freight train keeps going?
Right.
One way to look at it.
And that's what I think is interesting is with this, the fear added, and we'll get that initial reaction, but I think why the macro story in this is that if it is a lot hotter than expected, are rate hikes on the table? And I think that if any storyline is to catch a lot of people's attention, that one might recenter dollar expectations, because I feel like we've been at these lows or dollar highs and just testing new levels. But if rate hikes are on the table, does that change the story completely?
Right. Now, Fed Watch Tool still has a hike cut priced in. They moved it out further in time. Does that come out of the market, and do we get a couple of chuckleheads calling for, the next move on the Fed will be to higher rates? I think that's the pendulum swinging too far.
Yeah.
The fact that they stopped cutting is in and of itself. Remember, we had at one point last year 7 cuts priced in 26. Going from 7 to 0 is a pretty dramatic shift. But what I like here about structure is, when you look at that Kiwi market, there's no bottom under there if it trades lower.
Right.
So if you want to buy it because it's cheap, that's your call. But your game plan around what's a reasonable level to get out, you tell me. There's nothing underneath it. So you have to pick a dollar amount you're willing to risk on it. Here, I see, because of the structure, this is giving me an idea, okay, where did the market find value yesterday? Around 102.40 and a half. 102.40 to 50. We spent a lot of time there, and then we traded a leg higher. If that's the case, this kind of starts to give me where the market expressed some interest in being long. Does that continue to show some interest down there? If I want to be the contrarian and buy the dip a little bit, and if I'm wrong and they take out those lows, the next stair step is probably where I'd manage them. I like setups where I can define where I want to take some profits if I'm right, and also if I don't have anything on it, I'm looking at an opportunity tape-wise. This kind of gives me a setup where I can put some guide rails around it from previous tape action. And where if we go over to Kiwi, and that same, and let's squeeze it up a little bit, we don't have the same constructive tape action whatsoever. And in other words, we haven't built on, we built some gains, we didn't hold on to those gains, unlike the euro, and we're rolling over a little bit here. This is a little bit more muddled chart. Interesting trade, sure. It's 56. It's funny. A friend of mine reached out to me and was looking at he'd been looking at property in New Zealand. And if you think about it, a year ago, Kiwi was trading at 70 cents. The property he's looking at with 56-cent Kiwi is marked down by almost 30%.
Yeah, crazy.
So, and he happens to have dual citizenship. So it's, he's like, I'm looking at houses now that are, for me, really on sale. And it's an interesting dynamic. So yes, cheap currency, tape action, not as constructive. Make of it what you want, though.
But I think what you're bringing up is super important, and we can reference just these past few months as examples of if you are saying a market is cheap, that the dollar can't get any stronger, and you're entering some of these contrarian positions without any expectations before, be it based in tape action or a dollar amount loss. If you're coming into it without expectations, you've been burned pretty bad over months because there really hasn't been a lot of reprieve. And if you're just picking a price level, every new extreme has been a fresh high for dollars. And so coming into it with an expectation of exit, good or bad, beforehand has been really important, as well as your time frame, because people can be stuck in this for more dollars than they initially thought, and just for longer, because a lot of these are mean reverting markets historically, and so it really psychologically gets easy to justify. I mean, this will come back, so why would I realize the loss? But then all of a sudden you're in this trade for 3 months.
Right, and the question becomes, but from where?
Exactly.
Now, I traded Kiwi, and this was still on the floor when Kiwi traded 48 cents, and the Reserve Bank of New Zealand
Did you
intervened.
buy a house?
No, I was trying to hold on to mine at that point because I was long Kiwi from 52, 51.50, and they were selling 100 lots in a fury because they were liquidating people, and it wasn't. Yeah, the 48s I bought were building inventory. And I was quite relieved when the Reserve Bank came in and just goes, we're 50 bid on the world. So, and the market found some stabilization there.
That sounds terrifying.
It was a wild ride. But my point being is, while this is, from a pot odds standpoint, very cheap, currencies get elastic when they get into new ranges. So setting those expectations around what I'm willing. Yes, it's cheap, but think about, you could have said it's cheap at 58 cents.
Yep, I was just about to say right here.
And at 57 cents.
And you haven't seen anything back
and
there.
And you were never given a reprieve.
Yep.
So think about what your goals are, and if the idea is it is cheap, realize that exercise of you have to feel comfortable picking a point that's a new low, that's, again, even cheaper, but where you're going to manage expectations. That way you go into it, you can take advantage of the opportunity, manage it, and then come back and move on to the next opportunity. So let's take a look really quickly, Aussie Kiwi. So we're talking about two commodity pairs that have not performed against the dollar that well.
Interesting. So here we're looking at the daily chart.
And why I'm looking at this, guys, is we know Aussie's really weak. We know Kiwi's really weak. Is one more weaker than the other? And how can I look at? Well, I could do the math. I can look at high to low percentage-wise.
You don't need to.
I don't want to. Yeah, I'm too lazy to do the math. What do? I look at the relationship between those two currency pairs, and what that tells me is they're both cheap by about the same percentage. This cross hasn't moved that much lately.
Yeah.
Is there a trade here? Not for right now, and we're running out of time. We'll go back and take a look at this maybe tomorrow. But no, they're both in very low levels right now. One hasn't outpaced the other in terms of one's fallen appreciably more than the other. That's what the cross tells me right here.
Yeah, an important check and frame of reference. Last thing I want to bring up is, are we looking at this pound dollar market? We've seen it much more elastic than even the euro dollar in recent trades. So is this a place to look for this CPI reading? Do we see a more elasticity in this market than perhaps a euro?
I think so. I mean, they've done a lot of damage here. I talked to three friends this morning, all who live in the UK, who are all they have a Labor government right now. All my friends are Tories, they're conservatives, and they're all, oh, this Labor government is going to destroy the pound. It's going to par. We'll get a reaction here. I think there are other things playing through here. Again, the gilt market, their equivalent of U.S. Treasuries are called gilts.
Interesting.
It's getting sold very, very hard. Now, our yields go up and our currency gets stronger. Their yields go up and their currency gets beaten up. Why? Different set of drivers on how the economy is doing. It'll be interesting to see if we have. I don't honestly expect to see as much of an outsized impact CPI and sterling as I do in things like euro and those commodity currencies.
Just because of the amount of storylines around this one, whereas the others are free to be reactive to this news alone, for at least for the moment.
But this has, a tremendous markdown. We saw euro sterling move dramatically. I would be more inclined to look at some euro sterling if I was going to trade CPI against it, with the idea of selling some euro and buying some sterling, just because what I'm doing is taking out the dollar component and picking up currency that is a little bit more relatively cheap than the euro right now, and seeing how that plays through.
Gotcha.
One way to look at it. What I love with SpotFX is you can parse these. You don't have to go out and construct euro sterling. It's right there for you. It's tradable. So great walkthrough, my friend. This has been really fun. So in half an hour, we're gonna get an opportunity to trade. So this is great. We'll be back with you tomorrow at 6:30. Have a great day.